making lots of this type of content, because the only thing I do is by doing that, I give them more ways to sell and make money off of something that you didn't pay for in addition to past your charter membership payment. Think about that. You're getting something that has already been paid for in advance, but it's not intended for the general public. Your brethren here are the ones that mess it up. I didn't want to share it at all with the public. But at some point, when people are making millions of dollars around the world selling it because I don't let anyone else in this community anymore, it's scorched earth policy now. I'll put it out there where only a fool will now pay for it. And you have a seat here where they want your seat, and they will never have your seat. But some of you are belly aching to me in a way where, because I'm obsessively compulsive and I'm a bit of a prick, it makes me want to say, I don't give a shit, and I'll just stop this year entirely and say nothing to anyone and be content that I've already done enough. I've done enough. I've done enough. So when you send me those comments, the handful of you, understand it. The only thing that makes me want to do is turn off the faucet entirely. Because I have it. I have what I have. I can stop right now and it's enough. I have people all around the world proving. Okay, I had people in here, oh, well, none of this stuff works. Well, I've removed that. I have people all around the world making money with proof that would stand up in court. These price action models don't work. I gave away one of them. And that's what everybody uses to pass prop firms. You're upset because you have no sense of value, because you don't understand or appreciate the value of you being part of this community. You're amongst people that some of them in here are still pieces of shit. They're selling it. They're selling access. They're sharing their access through their Telegram channel. They're doing all those things. Anytime I make a mention of something new, they're writing it down. They're putting in their mentorship. If you were in my position, what would you do? What would you do? You just let them make millions of dollars off it? The ones that say, yeah, you're full of shit, you're a liar. You are a liar. That reverse psychology bullshit only works in movies. It doesn't work on me. Now, any other given day, we would have already ran up there by now. We're 5 minutes into the 10:50, 11:10 macro. So I'd like to see it at least reach up into halfway point between this high and the old high I'm using for over here. So what I did there with that other partial is I simply just took this high to that high there. You can see it's an old high, and it's where my other limit order is to take a partial off. So that's why that's there. And again, I don't need this level to be traded to. These relative equal highs can stay intact today, and it won't upset the profitability or remove the profitability of my trade. I am starving. That was the longest stomach growl I've had in a long time. It just kept going and going and going. All right. Just a little bit more, honey. There you go. Oh, you booger. Do you see that? You saw that, didn't you? These guys are trying their hardest to keep me from getting paid. Come on now. I'm going to raise the stop loss up. Lock in under here. If it goes there, I'm not willing to sit through any more of that retracement on a day like today. So again, brokers will pull off the shenanigans. I mean, it's only 5 contracts. You're not going to tell me they couldn't find 5 counterparty to get on the other side of that trade. They could have. I'm going to satisfy. I'm going to satisfy my urge to be out real close to where I was trying to get to. So it didn't fill me, but that's a consolation prize right there, getting out there in the event they want to sink it. So I managed the position the best I could this morning under the conditions that the market was presenting us. And now, because that order didn't fill, I got less of a favorable exit. But it was only 2.5 handles off where I was trying to get filled on with my limit order. So it is what it is. If it would have been a market order, it probably would have been comparable to how it would have been filled anyway. So I'd like to see it run real sharp for that 80-75 level now. This is a good video. This will be real good on YouTube. People would really appreciate this one. And I'm intending it for you. You, the charter members. So we've had this. We've got that traded too. So that's been fulfilled there. This one has been fulfilled. Man, my stomach is talking. Time to eat, ICT. It's been 17 hours, bro. You gotta do something. Alrighty, and again, obviously up here. I had somebody send me a comment in the YouTube comment section. I believe that's where I saw it. They want me to do this. Yeah, I don't. My eye would keep going there when I'm not trying to do that. So I annotate it so that way you, as a student, can see where I'm expecting price to reach for. But I don't want to have all that lipstick on it because my eye, like anything else, like a piece of meat between your teeth, your tongue's going to keep going back to it. If it was up here, number one, it's probably going to be in the way. I like to see the chart run into my level because sometimes I'll take screenshots of it, or it just looks better as it runs into that level, not into text. Okay, so I keep a little bit of space where the last candle is and where the end of the hard right edge begins. I like to leave that little space empty, and I don't want any kind of annotation there. See how frustrating it is? They keep reaching and reaching and reaching, and they could still keep that 80-75 level intact today. That's what makes trading on a holiday with holiday volume so challenging from a patience perspective. I'm going to take 3 off there, and now I'm going to let the rest be whatever it is. So I felt the urge I felt the urgency to manage the emotions in the trade because I'm reminding myself constantly that it's a holiday volume. It doesn't have to hit that 80.75 level. It could be getting real close to it there, and they deny the retail traders that would treat that as what? Resistance to sell short. So if they're going to deny them and deny those individuals that are long like I am to get to that level, it would be just like them to intervene today and say, nah, it ain't going to happen today. And if I let it ride this far up and not take anything off, if it were to come back and stop me, I would be upset that I let 15 plus handles slip out of my hands on the remaining balance. Where now, if it were to do that on 2 contracts, who cares? I took the lion's portion of the move out today. And I walked you through it. And I told you what I was aiming for. And whenever I tell you a liquidity that I'm using as a potential draw, that's just where I believe it's going to draw in that direction. It needs to go into a trade that allows me and affords me an ability to profit between where I get in at and in that direction of that liquidity. If you can't find a trade that offers that, and you're trying to just trade the liquidity itself, well, you're not doing what I taught you. The liquidity is the draw. It's the reason why probabilities are behind that trade. They're in your favor. It need not trade to 980.75 for me to be profitable. I've had, I don't really want to count the 6 contracts here because that was just me pairing off something I threw in addition to because I wanted to prove a point. So in a lot of ways, just look at that as over leveraging and then me fixing it so that way I can go back into spec with the trade idea I had in mind when I initially put it on. And this was my first partial, my second partial, and then me taking off something. Or no, that was my limit order, sorry. And then me taking off something here because it didn't fill me when you watched it trade 2 and above where my limit order should have been filled. It didn't fill it. So I took off something there. And because we're hem and hawing around in here and not really running to that level, and because it's holiday, it could deny me. So I took off 3 of the 5 here. And now I'm in a position emotionally and psychologically that I don't care if I see that 16,980.75 level traded to today or not. Like it completely disarms me from the need to be right. Okay. I had to make adjustments for the stop loss here because I knew where I had the stop loss. It was not right. I had to make allowances for the movement here because I told you the low was intact in place for the morning. And then we would run for the buy side. So we were discovering what? Buy side liquidity here, then here, here, and here. And we have yet to take out the relative equal highs that are over here. And if I wouldn't have taken those partials off here, right now I'd be squirming in my skin thinking, I should have done it. I should have done it. I should have done it. And then that would be causing a concern for me and worrying about the woulda, coulda, shoulda versus managing the right now delivery of price action. So that's the benefits of knowing how to manage the trade, taking partials off. You are very, very professionally managing your emotions and your psychology when you take partials off. Whereas you listen to other people, or maybe your internal voice and your conscience telling you that you shouldn't take it off because you can make much more if you keep it on and it goes to your target. Well, how do you know that's going to happen on a holiday? I don't know that. It's more prone to be a day where I do it wrong. And if you keep on holding on to something and it does like what it's doing here, this would upset me. And then I would be worried. Okay, hear the words I'm using now? I would be worried whether or not this fair value gap was going to support price or not. And then I would be worried about these relative equal lows that are real smooth, that if they go through the fair value gap, then I'd have to start thinking, well, this is probably where they're going to go. And I'll be willing to hold on to a deeper retracement. No. I got 1, 2, 3, 4 partials in, and now I don't care if it even reverses and goes to my stop loss. You see how I completely disarmed myself? There's no adversary now. There's no adversary in this trade. I've conquered it all. I've vanquished all adversaries in this particular trade. I've taken down fortresses and castles and kings. And the last level boss up here, I might not be successful in, but I have profited along the way. And I'm not worrying about whether or not I'm going to be victorious or not. You see the paradigm shift there? It's very difficult for me, and I've thought about how I would do certain topics and subject matter in writing these books. And I'm not sure I'm going to be able to communicate it effectively. And this is like one of those topics where it has to be done in front of you, where you see it, you hear my internal dialogue, what I would be considering impactful, what is irrelevant to me, what's insignificant, and then what changes the tone and or the direction of the trade in terms of my probability or belief in that trade. What would become barriers to me having my convictions disrupted? Well, the fact that it's a holiday, the fact that we have not quickly and easily, right in here, we should have just really easy just reached up here and grabbed that. And it didn't do it. I don't like to see fair value gaps this high up into a target I'm aiming for. I don't like to see them traded back down into. I don't like that. We want to see things like this act as like an exhaustion gap, where it's pushed up there, and then finally just throw it up there and get whatever liquidity is offered and distribute your long positions. That's my mentality. That's how I've been managing the trade here. And as I was walking you through it, I was telling you that these are all concerns for me because I don't want to see it retrace. Because if it were to retrace, then I'm going to start worrying if I didn't take any partials off. I would be worrying about this. And now because it went through the fair value gap, now I'm thinking, okay, does it want to retrace rather down into here? And if it does, how much further can it retrace below that? Well, then we have a fair value gap over there. And then you got to go back. Okay, we have order blocks here. And then you see what you're doing? You're making allowances for deeper retracements when if you just would have did what I teach all the time, pay yourself as it's going in the direction of your trade. Don't take partials when it's moving against the direction of your trade. They are many times emotional responses versus planned profitability, planned exit points of strategic, profitable exits. Partials that are planned, not, well, this is a consequence to not taking out a better exit when it was moving in my favor. You see the difference there? This took a lot of time for me to build this in my understanding and make it part of me as the trader. You have to do it. And there are going to be times when you take partials that are too early, or you didn't hold on to one, as long as you probably would have liked after the fact. But in the beginning, you have to have a baseline of experience, and you can't build that until you start doing it. That means determine where the market has liquidity. And then if there's multiple ones, start looking at the point between the two and start allowing for price to get to them and not here. It doesn't need to get up here. I measured between this high and the relative equal highs here, and that was where my partial didn't get filled right there. The limit order did not fill. So I had to close it manually because this high here was 1/4 of a handle or one tick. It made allowances for that order to fill, but it did not fill me. So the way I combat that in the frustration to put it aside and not be obsessively compulsive about my order didn't fill, because you heard me talk about it. And when I stopped talking about it and I wasn't talking in my mind, I was saying that thing didn't fill me, and I was starting to get mad. So how do I manage that emotion? Just bail out on the 5 contracts that would have been filled at that price, but I just eat the fact that it's 2.5 handles away from where I wanted to get out of with that partial. Is that still, good? Yeah, it's great, because I took 5 off from 73 down to where I was accumulating positions down in here. So you have to compensate, manage, because trading is like plate spinning. Okay, you're spinning these plates on sticks on a stage, and whether you allow an audience to watch you or not, you are an audience of one. And that audience inside of you is going to be constantly holding up a tomato, ready to beeline you in the forehead with it if you make a mistake. And I'm highly critical of myself. There's no troll out there that could ever say anything more about me, in a critical manner than I would of myself. So the way I've learned to combat all that is to reward myself in places that make the most obvious sense to do so. If I'm bullish, I want to take out old highs. I know there's going to be people that are short or want to get short, and they're going to place a stop loss in the form of a buy stop. That's a perfect counterparty to me selling to them my long positions in partials. So I'm going to sell to their buy stop. And I have to determine an exit strategy in advance for where these partials are going to happen and where my best case terminus exit would be. In this case, it was 16,980.75. And I already know some of you are watching this right now, and maybe you've seen it get here and watch this retracement, and maybe you had the same internal dialogue that I'm going to be revealing to you when this is done and I post it on our channel. And you'll think to yourself, wow, that was exactly what I was thinking. This is what I was fearing at the time. And the way you manage that, and see, because it's a holiday, this could very easily become an inversion fair value gap. And this doesn't get any higher, and it doesn't trade here at all today. And it needs to trade there tonight or tomorrow, or doesn't trade there at all and goes significantly lower. Okay? Those are all the compounding interests that plague a trader while in a trade. So you have to be able to manage them effectively by knowing where. I told you where my partials would be before we started moving. I had everything illustrated, and where I didn't, I articulated them in real time. When I felt the pinch of uncertainty, why? Because my concepts don't work, because I don't have enough experience trading? No, because it's this particular day, which is holiday volume. And we're getting to a time where the market has run a really nice run from here all the way up here. It's been one side. That's great. We had our Judas swing, which is what I was outlining to you. But we did not trade to our target. Why is that happening? It's because it's a holiday. That's why. Those are the characteristics that generally come in on days like this. So if you're going to trade, and I'm not saying or suggesting that you should be on holidays, you shouldn't be doing it, okay? But if you're going to do it, it's important that you know that you have to be very diligent about how you're going to manage yourself and your trade. And if you don't, what will happen is if you mismanage a trade on a day like today and you lose money, or you don't make as much money because you got out of the trade entirely and it ran to a better degree of profitability if you would have stayed in, you're more prone to go in impulsively right away again to take a trade, to try to get it back, to win that last little piece. I've seen that guy, Patrick Whelan, on his live streams, where he literally went back in just to get another 2 points. Like, that is one of the biggest testimonials that you don't know what you're doing. And you're worried about the money, not the excellence behind your trade and executions. But that's the primary driver for me to educate you as a student. I mean, if you're here to learn how to be excellent in your executions and management of your trades and selection of your trades, trusting what you're trading, trusting that what you're working with in terms of price action is part of what it is that you learn how to anticipate delivers price at a certain degree of precision. And if you don't have those characteristics behind the day that you're trading in, then you shouldn't be in the market. But I like to put myself in situations that are complex and or complicated, so it allows me the real examples of showing what it's like when I am in there, I'm engaging, and I'm in a position where it takes a little bit more effort on my part to manage it. And it's helpful as a student to see that, because as your educator, you want to see, when is it hard for me? Okay, and how do I wrestle with it? How do I overcome it? How do I manage it? How do I manage the trade? How do I manage the emotions and the psychological tug of wars that take place when the market doesn't start behaving in a manner at the time, in any other given time or any other day? I would expect it to just, it's going to be easy. It's just going to go in and run right away for my targets, and I have no problems. When it's a challenging environment, like a holiday volume day or a day after a holiday, where the uncertainty of what it wants to do, because sentiment is not established as well as it would have been. Like we had a weekend, we just come off of a weekend, and we had a soft PM session on Friday. And basically the last 3 trading days have been nothing burgers. It's just like there haven't been a lot of movement outside of the ranges that were created 3 days ago last week. So it's been narrowing, and in the highs, the opens and closes of the daily ranges were essentially the same price. So it's showing an unwillingness to go any one direction over another. So the one-sidedness that we would demand for high probability trading is absent in the current market structure as it relates to the daily chart. So you're relegated to going into the intraday charts and then studying the intraday volatility and seeking the liquidity that's offered on those lower time frames, which is all I did today. I framed the bias, as I mentioned, by posting it into the channel saying, here's the daily chart. It doesn't bode well for probabilities being high. But I told you, gun to my head, what side of the marketplace would I want to work on? The long side. I'm expecting higher prices. So I had to submit myself to waiting to see what price does. I don't know if it was going to go down and create a turtle soup below that low. But if it went below that one, I would be interested in that one. Why? Because this run from this low up to here was prior right to 930. And at 930, that was this candle here. And at 931, we ran, broke, short-term little swing, low broken. That's a shift in market structure. Drop. For what? To take the sell side out. Who would want to see that happen? Smart money. And you can see that I was off by a little bit because my entry's just above it. See that little caret appears right here? That is where I got filled at. And instead of talking about it while I was doing it, I should have just hit it and then told you what I was doing. But the teacher in me sometimes gets in the way. But it's good for you to see me have to manage it when it's like this. And you watch me see that my stop loss was off and I had to adjust it. I'm still irked by that because my passion for executions, to being excellent and well placed, and once I move a stop, I don't move it back. That's like a general rule and principle I live by. But here, proving prognostication and proving that I was aware that I was off, where my stop loss would have been easily stopped out, and then look at the run that would have taken place. If this happened after I got stopped out, I wouldn't have been back in because it's a holiday, and I would have been upset with myself, thinking, well, I had that. And all I had to do is just open a stop up. But my pride would have said, no, you're ICT, don't move your stop. When the trader in me is worrying about the ego strokes that the gambler in me would get, I leaned on the analyst, and the analyst in me said, trader, adjust your stop loss just below that low right there and allow for this movement. Go back and scrub back to that point and you'll see it. Like that's a lesson that I can't teach that in a book. Not because I don't want to teach it. I just don't know how. I don't know how I would. Like, you have to see it here like this. And that's an advantage of being in this community. You get to see things like that are beyond the scope of what I'm willing to give to the public on YouTube or anywhere else. But let me see this video shared. Let me see it. And I will literally place this in the YouTube commentaries, and I will never, and I mean never, share another video in here again. It'll just be text, and I'll talk about things that you ask me only. It's in your hands, folks. I could care less, really, ultimately, where we go in the direction of that. Okay, but I don't need to make these available to you. I'm not going to do it on YouTube. So if you want to learn these types of things, you need to guard it. Keep it. It's too good for other people. Even if you were to sell it, it's not good. You're not going to get enough money to overcompensate for the value of having this information and everyone else not have it. Like, that's an inside advantage. And some of you are so broke that you just simply want to go out there and throw it out there for people to buy it and fight over it like a pork chop, and pit bulls fighting over to buy it, versus being the person that understands how to do it, where its usefulness is, and you're able to capitalize on something that would yield way more over the course of your life versus just a flash in the pan, somebody bought a video, I made available to them. Okay. And then what? Then what? You get nothing extra. You get nothing. You get whatever you have. That's it. And I hold on to everything I'm have in my intentions of sharing. Doesn't matter to me. I'm going to have this stuff in my hands the rest of my life, and my children are going to have it, whether you receive it from me or not. You want to mess it up for yourself and everyone else? Go ahead and start sharing it. That's the only control you have here. You'll completely turn off my interest in doing it, because no one's going to be able to teach you this. Nobody's going to teach you this. This has nothing to do with Goldbach. I'm so sick of hearing about that shit. People sending me emails and messages in TradingView. What about Goldbach this? And are you really being truthful about Goldbach not being part of the algorithm? It has nothing to do with the algorithm. Okay, I mean that wholeheartedly. It has nothing to do with the algorithm. Nothing. It's just something, another gimmick. Somebody wants to add something to whatever it is I've taught to make them sound like they have a niche. They have something that elevates them beyond this. Take my stuff out of it and call it whatever you want to call your Goldbach bullshit. Say that's what it is, because adding anything to what I'm doing, you're diluting the purity of what it is I'm sharing, because I'm sharing the algorithm. Period. There's nothing else. There's nothing else that needs to be added to it, because anything added to it is just lipstick on a pig. It's useless, and it's still a pig. Now, look at that measure of retracement. You see that? All the way down. Didn't even cause any heart palpitation at all. I'm talking about pigs with lipstick at the time. But imagine if you were in this trade and you didn't manage it like I was doing up here, and explaining to you why. Think. Remember what I said earlier? I said, because it failed to get up here on this run, and if it went below this fair value gap, I would anticipate this becoming an inversion fair value gap and potentially moving lower. That would be my concern. And I would be fearful of that not supporting price, but becoming that very thing. And look what it did. See that? So one of the hardest things you're going to learn is how to live with yourself in and outside of your trades. And I am prone to beat myself up if I don't have the measure of precision that I strive for, and or if I don't execute on the trade, or if I have an impulse rise up in me about what I want to see price do and it doesn't do it, and then I become reluctant to manage it in a way like I've done here, where I just pay myself. I pay myself, and I remove the desire to be right, and I remove the effectiveness of the market to make me feel like I was beaten. Because I take that, I personify the marketplace as an adversary, and I look to disarm it. I look to vanquish it. I look to put my boot on its neck and watch its life force leave as I look into its eyes. That's how I envision trading. It's not a sporting event. Okay, it's not a mountain climbing experience where I look over my shoulder and I take in all the beauty. No, it's war. That's how I internalize it. So when it does beat me and it cuts me and I lose a limb or I lose flesh or blood and I lose money, I feel that beyond the scope of whatever the monetary loss was. So in my mind, I think to myself, okay, to keep that from happening, I need to keep the flesh wound to a minimum. I don't want to lose an arm, I don't want to lose a leg, and I don't want to be beheaded by the marketplace. So I have to find ways to keep gaining ground, reducing the forces that will be opposed to me. And those forces are these price levels here. So if I'm getting ready to make a run against a castle or an adversarial fortress, and it's up here, I know that if they have this castle up here, they're likely having fortresses to defend that level here. So I have to break my strategy up into thinking, well, once I vanquish this fortress, I need to take some bodies and start stacking them. And then I see this area over here where the bodies are. This might be a decoy. Then this is where I need to be focusing on. So my limit order takes me out there. So I'm taking down more of these prices and I'm stacking bodies, and then reaching for the next level here. And because it wasn't behaving a certain way or whatnot, or my uncertainty of my ability to overcome and get to that castle or that terminus of objective, overthrowing that adversary, which is price, then I have to make allowances and start stacking more bodies, reducing their forces and allowing the forces behind me to feel their morale be boosted. Kind of like Braveheart. You ever see the movie Braveheart? I mean, Mel Gibson gets out there and cheerleads in front of them. Yeah, we're going to do this. We're going to do that. Blah, blah, blah. And yeah, there's people, part of that group, they're getting tore up. They're getting killed, right? But he's still cheerleading, saying, we're going to go out here. We're going to beat them. We're going to do this and do that. Okay. And you got to keep boosting your morale while you're in the trade until that trade is over. You can't champion it and cheerlead it. You can't. And you have to look for ways where the market will flank you, like it did here. And because I knew that it was likely to make a strong push against my opposition, I've been offering it all morning. Where are my weaknesses in here? I didn't want to see it trade back down to there, because if it did, it might have a more pronounced retracement, and they may gain ground on my forces or my army or my platoon of soldiers. And the market starts to move, and now I'm looking at this area here, and I want to see, can my platoon of 2 remaining highly special forces, SEAL Team 2, can SEAL Team 2 make a mad dash behind the smoke screen and run up here and take out the terrorist organization's leader? That's how I'm internalizing it, okay? I don't want to move my stop loss. I want to see it move outside of this inversion fair value gap. And if it takes out the body of that candle right there, then I will move the stop loss up just to the bottom of that candle right there. Why? Because that was the most energetic one inside of this consolidation, and we've broke away. And if it gets up to that level here, then it should, doesn't guarantee it, but it should find its way into that buy side liquidity there. And then I'll have to do an extraction and pull out my 2 MVP soldiers that are net long, looking for 16,980 and 3/4. Now that commentary for a guy, it's pretty badass. It's entertaining. You can vibe with it. You understand it. But for someone that is less brutish, or maybe the ladies in the community may not be able to appreciate a storyline like that behind why price should behave a way that it's behaving, and how I am internalizing price and how I'm engaging it with that perspective, where it's not a sport, it's war, and there's casualties to those events, and trading is no different. And it may be not as effective as a analogy for the ladies than it is for the men. And for the ladies, I apologize, but I try to do my best to make allowances for other analogies when it's appropriate. But right now, that's what I'm internalizing. So let me note that candlestick, because I really want to move the stop loss. I don't want to see it retrace this much and then still end up getting stopped out if it reverses and lose the same amount of money and not having taken anything off. What am I looking for? Okay, so I'm not so much concerned about taking any more partials off. I'm more concerned about locking in with the use of the stop loss. So it's not going to be much of a move. It's going to be from where it is here up to the low of that candle right there. But it needs to trade above these bodies here. Now, why am I saying that? Because if it does something like it did here, where it made these bodies here, and we went in here and we started procrastinating, I don't want to see that. Okay, I want to see it go up there and run quickly for that buy side at 980 and 3/4 and higher. So we're inside of a buy side imbalance, sell side efficiency, and we're touching the consequent encroachment of the inversion fair value gap there. I'm including that volume imbalance. You always have to include that also as a factor inside of that inversion fair value gap. So it may act as a means of support or resistance, or it may need to come back into this inversion fair value gap. When it runs outside of it, it might need to lay back down another wick over top of it. Notice that this volume imbalance is very similar to this one here. So if we start to trade outside of it again, I wouldn't be spooked out of the trade or the idea that if it trades back down into it again to overshoot this and maybe touch the consequent encroachment again before it runs up there, that's permissible to me. Now, again, think about that and how hard that would be to articulate in a book with static pictures. I don't know how I would do that. So there are barriers that are still going to be there for many students that will see something and read something and see it illustrated, but it still won't really scratch the itch or feel like it's adequately described it. And I know this about certain things going in, and it's been very not worrisome, but it has my concern, because I mean, obviously there's going to be a measure of the populace that buys the books, read them, and think to themselves, this doesn't make any sense to me, because they want it to be easy. They want it to be ABC 1, 2, 3. This is all you do. It always works. And you're going to be able to quit your job and you're going to pass every funded account challenge and you'll own the world. That's what they want. That's what they're expecting, because they paid for something, not realizing that there's going to be a whole lot of growth that's required in time. Much like just because you went through the charter membership, you made it to charter membership, it doesn't mean you know how to trade. It just means that you paid all the payments, you followed the rules and terms to that point. Now you're amongst this community. It doesn't mean that you know how to trade. It just means that you went through the minimum expectation. That's all it is. So now you have to learn with all the information and be poked and prodded by me to keep doing the things I told you to do and avoid the things I tell you to avoid. And it's not easy. It's very hard, as some of you have shared openly in the channel, how you've wrestled with certain things. And that's the type of thing I wanted to see in our community, where the visibility of showing your frailty amongst the other students. It's a moment where they can encourage you, and you can also lay it down. Don't carry it inside yourself, because if you keep it inside yourself, you'll make yourself push the button when you shouldn't, overtrade, over leverage, and keep going back in on days when it's not really in your favor to do so. It's therapeutic in a lot of ways. Again, if it gets over 16,976, I'll look for that to print. If it prints that, then the stop will roll up right underneath that candle right there. And if it comes back and stops me, I don't care. I'm completely content with that. Because my belief is if it goes above here, then it should accelerate to reach for those relative equal highs that are over there. They're way too smooth. So I'm looking at the down close candle, mean threshold, and top of the inversion fair value gap, and the fact that we had our bodies staying right at that upper quadrant of the inversion fair value gap. So I'd like to see it expand up in here. See how it went into it? And I'm going to see this candle become bold face and reach up into here, or the next one immediately start running higher. There you go. So now at this point, I don't care. I'm completely indifferent to the idea of getting to the target or getting stopped out. I've managed to trade to the best of my ability. I feel that everything I've done in the trade at this point was, for the most part, as I would have expected in the best case scenario, except for the fill down here on my first entry. I would have preferred to try to get below that just for the general principle of a turtle soup, but the turtle soup being the premise behind why I was entering there. And obviously I was a little off on moving my stop loss so prematurely, but because it's a holiday, I did so. And then I told you at the time that it was going to likely stop me out. So I had to make an adjustment, something you don't normally see me do in my trades. Once my stops are moved, I don't ever backpedal them or widen them. I had to make that exception here today because, well, it's clear and obvious, right? You can see it. I mean, I could see that this was going to happen to me. You don't see that in today's teachers or traders or gurus. They don't know how to do that. And I'm teaching you something that I wasn't taught by someone else to do. Because if I could go and say, okay, go to this person and they're going to teach you what I just did down here about managing your stop loss. Most of them don't even use a stop loss. So they don't even know how to put a stop loss on initially. They don't know how to trail one. They don't know how to do it effectively. So these are things that as a charter member, you're privileged to have. It was part of what your experience was intended to be consuming, not just videos, but gaining the experience and seeing things that would otherwise not be made available to other people. But again, make this video, and I believe me, if you share it or sell it, it'll get back to me, and I will never do this again. And you're not hurting me because I know how to do it. I don't need these videos or anything else to come out. But you as a student, you would want them, right? So it's in your hands. That's the only control you have. And it does not bother me at all to stop. Now again, getting back on the topic of a holiday, any other given day, it would have ripped right on through that 16,980 and 3/4 level. It would have done so expediently. The fact that it hasn't ripped up there, and the only thing we've done is taken out this high here. See that? Volume imbalance right there. I'm going to take one off there because I've trailed the stop loss up here, and this could fail. I wanted to see it run up there, and for it to come to a new high and me not take something off and get stopped out just because I trailed it there, to me, that is a defeat. And that is something I try to avoid. Because if I don't manage it like this and it comes back and stops me out, I took nothing off when price went to a new high. And that's a rule. I have to do that. And I already know it's being problematic about getting to that level I've outlined and targeted from the beginning of the morning. So if it were to go up here and then reject and come back and stop me out, I left all this on the table. Well, in this case, I've taken off half, which in my mind, it's still not as good as reaching this level and being able to capitalize on that, because that's the level I outlined and drew as a target or draw on liquidity. This is the favored outcome. And if it were to stop me out, even if it's one taken off here and the final gets stopped out here, yes, is it a victory? Yes, it is. But it's not as enjoyable for me. And I'm saying this because I want you to understand what I'm feeling while in this trade. I am still human. I still feel these impulses. I feel the tendency to have reckless abandonment. I have the tendencies to feel regret for not taking off a partial or adding more at certain points when I wanted to add more. I feel all those things. And I'm making that available to you here as it happens. And I'm articulating it in a manner where if I had this information given to me, if I had saw someone that I was trying to learn how to trade and they were able to do these things just like you're seeing me here and articulate why it's important to be doing it, why other things are not so much of an important, that would have helped me a lot. Because when I was coming up, I felt like the fear I had was paralyzing, and I'm the only one that feels that because everybody else just keeps taking trades. Where I was afraid to push the button, I was afraid to get into a trade, and I didn't know where to buy or sell. So I had to really compensate for that, and I created, 81 different ways to get into a trade, because that was what my mind was at the time. Was my weakness was my entry. My weakness was my inability to go in and feel confidence while going into a trade. So I had to come up with all kinds of ways to defend myself. And from a perspective like a man or macho bravado perspective, I afforded myself lots of weapons to defend myself from missing a profitable entry. So I have 81 weapons at my disposal to go in and pick and choose how I want to get into a move. But the greatest epiphany I had was discovering who's the adversary. See, the adversary in this trade is 16,980.75. So far, it's been able to stave off any advance on my army. But I've taken lots of casualties from the 16,980.75's army or forces. I've gained a lot of ground. Ultimately, they can come back and take out my last two guys. But I've gained a lot of ground. And I can regroup and come back tomorrow and make an attempt to get that castle. Or I can target something else. And that's how I internalize price action. That's how I look at it. And I run these types of little analogies, if you will, while I'm in a trade. I don't look at this candle's going to fail. How much money am I making or losing? That's not what I'm looking at. I don't even know how much money each one of these things were each time I took it off. You'll have to watch the video. I care less about that. I'm watching how these individual candlesticks behave. Are they able to gain ground? Are they losing much ground? Am I on side still? Is it still possible that the market can still go where I want it to go? It could still run from where we're at. We're inside the inversion fair value gap. I don't want to see it get stopped out, obviously, because I want to have the victory of having taken that castle out with SEAL Team 6 last member. And I think it's pretty safe to say that anyone with the understanding that as a charter member or someone spending a time with me would have anticipated this high being taken out on any other given day easily. But because it's a holiday, they tend to frustrate and they tend to keep it inside of a defined range much more than they do when elements of buy side or sell side discovery on other days that are not holiday, where they're prone to stay in a range. Those characteristics are starkly contrasted when you see them side by side. So you have to have a different way of trading them. You can't just simply say, well, I'm going to trade this no matter what all the time, and every day it's going to be the same characteristic. No, there isn't, because there's an algorithm that runs and delivers price, and it operates under these specific codes, these scripts that they will perform. And on days like this, sometimes those scripts get overridden by manual intervention. They'll go in and say, okay, well, we're just going to run aggressively the other direction and take out the low of the day and leave this up here. And then we'll come back 2 days from now and take that out. And there's my stop loss. Now, do I feel bad about it? No. Would I have preferred it to take out that 16,980.75 level? Absolutely, I wish it would have.